What the heck just happened to the stock of Hormel, the food company most commonly known as the maker of Spam, Jennie-O Turkey, Skippy Peanut Butter? I've recommended Hormel repeatedly based on the fact that this company is trying to do more natural and organic, particularly with that acquisition of Applegate Farms, popular purveyor of organic deli meats roughly a year ago. But in the past week, the stock has been obliterated, falling from $40 on Monday down to less than $35 today. Some of that's because we had a nasty market-wide sell-off, and the food companies were involved with it. But a big part has to do with response to Hormel's latest quarter, which the company reported on Wednesday morning. And look, it was a pretty solid quarter. Hormel delivered a 1-cent earnings beat with in-line revenue and even raised their full-year earnings guidance. But despite these strong headline numbers, the stock plunged 8.5% on Wednesday. Investors worried about declining margins on pork and turkey products, not to mention the stock's supposedly rich valuation. Even after this week's dropping, Hormel does sell for 21 times next year's earnings estimates. Although given that it's some of the fastest growth in the industry, I think that's justified. Still, when you see a company report a seemingly good quarter and its stock gets killed, you got to wonder, is the market overreacting? Give you an excellent entry point, maybe something else to worry about? Let's take a closer look with Jim Snee. He's the president and chief operating officer of Hormel Foods. Learn more about the quarter and his company's prospects. Mr. Snee, welcome to Mad Money. Good to see you, sir. How to see you.
Thank you, Tim. Good to see you.
All right, we were a little confused because we liked what we saw, but we know that the analysts were really focused on margins. I don't want to put the cart before the horse because margins aren't necessarily what our viewers are concerned about, but we wanted to address the decline before we address what could be the opportunity. They were concerned about commodity pork prices coming down, worried about the idea that maybe you're going to be, it's too good, that it's basically too good right now and can't last. And what's your response?
Well, as you described, Jim, I mean, so we announced our 12th consecutive record quarter of earnings, pretty impressive performance. We raised our guidance for the full year. We've delivered earnings growth 27 out of the last 30 years. And with that increased guidance this year, it'll be 28 out of 31. And so as we think about it, we need to really focus on the things that we can control to continue to deliver long-term growth. And those are the things, brand building, innovation, acquisitions. Also Wednesday, we announced the acquisition of the Justin's brand, another entry into that healthy, holistic, natural, organic space, which over the long term, those are the things that are going to allow us to continue to deliver the 5% top line, 10% bottom line long-term growth goals that we have for our organization.
And for those who want to know those, there's a great, we call them decks, handout which has the long-term stuff in it, which is really important if you're going to buy the stock. Let's talk Justin's. Yeah. This is a cult following on our staff. People absolutely love the product. How about the price you paid, and when can you get the payback?
Yeah, so we heard that from your staff as we were setting up. It's a staple in all of their desks. It's a great brand in this rapidly growing specialty nut butter category. The price that we paid, we think, is a very fair price. And as we think about it over time, it's going to be a great platform for us to grow in this fast-growing space.
What else can you put through the Justin's name?
Well, we don't own it yet, and so we're working on that to really find out what kind of platform it can be. But we're very confident, and when you think about Justin Gold, the founder of this, I mean, he's an incredible success story.
Oh no, it's been great.
And so it's his mission of focused on people, protein, and planet is something that we really connect with, and we believe once we get to learn a little bit more about it, that this is going to be a great platform for us.
Okay, now you align your portfolio with consumers.
Yeah.
You've got the millennials, Gen X, boomers, and matures. Are you trying to get the millennials, Gen X to be a larger percentage of Hormel's business?
Yeah, I mean, we want to make sure that we're covering that entire spectrum. And the nice thing about our portfolio is we're doing it with both legacy items.
Right.
So we're doing it with Spam, with Hormel chili, and we're also doing it with some of the recent acquisitions, like Applegate, with Skippy, with Justin's, with Muscle Milk, with Holy Guacamole. And so we really feel like we're doing the right things to appeal to that whole demographic.
Okay, well, I thought the Applegate acquisition was terrific.
Yeah.
If there was something I didn't understand in the call. You said you need to gain back distribution that was lost when supplies were pressured.
Yeah.
What does that mean?
So when we acquired Applegate, one of the things that we were very open and candid about was that we needed additional supplies. So it's not like there's bountiful supplies of organic pork.
Right.
That was our first major concern. And so it was constrained. And as a result of that, because of the increasing demand, we didn't have all the supply we needed. We knew that going in.
Right.
And so we've worked hard over the time of the acquisition to expand production with existing producers, but then also find new producers on the pork side of the business. We've done that. And then combine that with the fact that avian influenza hit the business at the end of last year. So kind of a double whammy that really constrained supply on incredibly growing demand.
But you have a really terrific chart in here where you talk about there's just been episodically things that have gone wrong. And you fought your way right through them. Each time a margin issue or a flu issue, and it really hasn't impacted the long term. Exactly.
And that's been our message, is this ability to grow our business through some of the most incredible volatility over the last decade. So we've had recessions. We've had grain prices that have been through the roof. We've had the impact of PEDV, which was a pork virus.
Right.
And then last year, avian influenza on the turkey side of the business. But each time, our balanced model to our business has allowed us to overcome those headwinds, those obstacles, and deliver year-over-year growth.
Okay, let's talk about another obstacle that was confusing to me. You talked about overseas. It looked like the international profit dropped a lot.
Yeah.
And in it, you mentioned that there's been EU pork kind of basically dumping into the Asian markets. How does that work?
Well, so what's happened is when the Russian market closed to EU, they were no longer able to ship their pork into Russia. They had to go somewhere with it. They weren't going to stop producing pork. So that pork has made its way into the Asian market over time, really pressuring prices and increasing or having an impact on our ability to sell there.
But in your vast panoply, that international is not nearly as important for you as it is for a lot of the other food companies we talk about.
No, that's exactly right. It's the smallest segment of our business. But as we think about, future growth opportunities and growth platforms, we certainly would like to grow our international business and become more global.
One last question. It seems like everything you do, you are taking share. Like, I thought it was interesting. You're taking share Skippy right now, right?
Yeah, absolutely.
And that's because the advertising step up or because of brand awareness and new ideas, innovation?
All of those things. So when we bought the brand, we knew that we could innovate against the brand. We knew that we could prioritize it and have our sales force focused on it. And really, that's what we've been able to do. So we've been able to not only grab share back, but the innovation that we've done, and we've launched Skippy PB Bites, which is a great on-the-go protein-infused item for anywhere, anytime snacking.
Well, I think it's all working. I know that they're worried. I look long-term. Long-term, you're wrong to worry. That's Jim Sneeze, Hormel President and COO. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.